Yeah, so generational wealth means two things to me. It means education as well as money, but probably more heavy on the education part. So, one of the things that I'm passionate about, of course, is financial education, and I teach that on my podcast, Quiet Wealth. But I want to make sure that my children are set up for success financially. And that doesn't mean that I'm giving them tons of money, right? I'm trying to give them more the skills and the knowledge that they need to be successful when they.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Camilla Jeffs is the founder of Steady Stream Investments, a passive investor education company, and the host of Quiet Wealth, where she teaches 3 principles of wealth building, investing, business building, and generational wealth. Camilla, I think that's 4, isn't it? 3 principles: wealth building, investing, business building, and that's 4. That's 4 principles there, Camilla. Good to have
No,
you
it's
back.
3 principles of wealth: investing, business building, generational wealth, right?
There you go. I love it.
I can
Camilla,
count.
you can count. I love it. Thank you for coming back on the show. For those of you who aren't familiar with Camilla, you can go back on August 2nd, 2021. That's episode number 246, where we got Camilla's kind of background story and the types of things that she is investing on, or investing in rather. See, I can't even talk. But that was an awesome episode, so please check that out. Camilla, thanks for coming back on the show today. I know we got some unique things to talk about. It's been, what, a year and a half since you've come on the show. So welcome back.
Yeah, I'm excited to be back, Sam, and I'm excited to talk about something different today too. You could, like you said, the listener, you can go back and listen to my whole story, so we can just dive into like what we're doing now and what we're doing to move forward, right?
Please do share. I'd love absolutely to hear.
So, one of the things that I told Sam I'd like to talk about today was generational wealth. So, when I think about generational wealth, I think about two things. I don't think about it in terms of just passing money on to my kids or to future generations. I think of it as passing on education first and foremost. So, we've been doing something unique with our kids that I don't think a lot of people are willing to do, but I think it's super important because as we're looking at how we're going to pass on this information and the knowledge and transfer it so that our kids can continue to be set up for success, then it's important to be intentional about that. And so we start our kids out pretty young when they're 5. We actually start about investing when they're 5.
Wow.
But the way they invest is through our own family bank. We have like this family bank that they get, and they invest in the family bank, and they get paid 10% interest per month. How would you like an investment like that, Sam?
Wow. I'm in.
No, you can't be part of my family bank. So sorry. Yeah, so 10% interest per month. And we do that inflated on purpose because it was important for us, for the kids to be able to have more concrete ideas, to see something, right? Because the kids are making like $5 a month, and then they invest $2 or $1. And what kind of interest is that? If it's normal interest, it's less than a penny. I mean, it's not meaningful at all. And so we totally inflated it to get the kids going on investing. And we did this from ages 5 to 11. But then when they turned age 12, by the time my oldest daughter at age 12 had like $600 in the family bank, that was like $60 a month that we're spitting out. Okay, no, this is not working for you.
Right.
You're out.
Wow. That's really cool. I love that idea. What are some other things you're doing? And that was going to be my question was, how old are your kids? But I guess you answered that, in that they start when they're 5, learning how to invest
Yeah.
and collect interest on their investments. So what are some other things you guys are working on right now that are kind of unique in the financial education sector for your kids?
Yep. So that was when the kids were young. And now my kids are almost all of them are teenagers now. And so I have 5 kids, and we've been trying to figure out, well, how can we really enhance this investing. So since the family bank is too expensive for us to continue when they're teenagers, we have to kick them out, and then we have to find other ways for them to invest. And I know families that have done it, via the stock market, and they'll help them invest in their favorite company, like Disney, for example, and then they'll print off something that says, "Oh, look, you own part of Disney," but it's like a paper, and for kids, it's just not very tangible, which
Right.
is why I love real estate, and I love the tangible nature of real estate. So what we started doing with our kids is it's very strategic. So we flip a house with the kids. And the first one we did with them was a live-in flip. So we like bought when we got moved to a different state in Arizona. We bought a home that needed to be renovated, and we moved in and we lived there, and we renovated the whole thing while we lived there over the course of a year.
Oh,
Now, it's not very comfortable living in a construction zone. Like, I
no,
get it. I
no.
get it. But when we're in there, the kids are learning all of these skills. So my kids can now sheetrock and tile and do baseboard and all the things, like, and of course they love demo day. That's the best
Right.
day, is when
True.
you get to like knock down walls. And so with this flip, when we exited it and sold it, we made about $100,000 on this flip. Then we used a tax strategy called income shifting, where we shifted income to the kids. So you can shift about 12,000, a little bit more than $12,000 per kid. And that money is now tax-free,
Mm.
basically, right? So whatever money brought in. So we have 5 kids times 12,000 each, $60,000. So we can shift $60,000 and get that tax-free from our business expenses. Well, now you have to think about this. My kids, when we told them we were going to pay them $12,000, like, can you imagine their eyeballs just going really big?
Right. I want $12,000 today, let alone when I'm just becoming a teenager.
Right. So and to make it all, legal and acceptable, you have to track the kids' hours. So, and then they have to be paid a reasonable wage. And so we did all of that. And of course, and they worked hard for it, and they worked hard, they earned it. It wasn't like we just like, oh, okay, IRS says we can just give them money and then we can avoid taxes. No, it's all above board. It's all good. The kids actually worked in the business. So if the listener has a business, they can use this strategy really easily. So find ways that your kids can work in your business, and then you can shift income to them. Well, the 12,000 that we shifted to the kids, we gave them a caveat. We said, okay, 2,000 of that you can use to buy whatever you want after they did their giving, right? So we always insisted, part of their growing up years, they had to do 10% giving and 10% long-term savings, and then we would match their long-term savings. That's another thing that we did with the kids. So they got used to saving for something for long term, and they got used to giving always, and they got used to investing. So this $12,000, so they did their giving, their saving, and now they have the rest that they can buy something that they want, right? So this was a great opportunity for them to buy a big ticket item they've always wanted. Like, my son really wanted a nice mountain bike, so he bought himself a nice mountain bike. And then the other 10,000, we told the kids, this is for the next investment. So now we're going to go out as a family, and we're going to purchase a short-term rental that is going to be semi close to our house, that we can use as a family to build experiences and things. And then we are all going to invest in that together. And that's exactly what we did. So each kid invested $10,000 into a cabin that we bought, that just a couple hours away from our home. And then, me and my husband put in the rest, and then now we own this cabin that pays us to go vacation there, right?
Right.
And each of my kids is a 10% owner in the cabin. So now they are earning passive income, plus they're building equity and their own net worth. So it's so cool, because they have learned how the benefit of active working. And now, don't get the wrong idea, they were not happy to work all the time. Like, it was like 50-50, 50% of the time they're okay with it, 50% they're just like, oh, do we really have to do this again? It's just the nature of teens and even adults, right? Like 50% of the time, we're not happy about the work that we're doing, but the other 50%, we are. And so it's a interesting strategy to help them to really start building their own wealth. But then also the whole time that we're doing this flip, and we're working on another flip now, that we'll do the same thing with them. But the whole time we're working on it, we're having really great conversations with them, and they're understanding it's very tangible that they are investing, that they are working actively to get money, that then they're going to go now invest into a project. And then we're going to start teaching them how to read P&Ls and all of that stuff too.
That is really awesome. Do you have them participate in the paying expenses side? So when it comes bill day and you're like, okay, I got to pay utilities, we got to do whatever it is, pay the lawn guy. I mean, do your
Yeah.
older kids help write those checks and see that money going out?
Yes and no. Like I've been super disciplined about that because I've set it up all on auto pay, right? but but we do try to show them the P&L, right? So here's the profit, here's the expenses, and here's what's happening. And so we'll do that with them and get better about that.
Right. No, shoot, you are light years ahead of most people in the way they financially educate, if they financially educate their kids. I think most of us learn just by watching what our parents did, for better or for worse, right? Like you
Yeah.
watch your parents, you see how they handle money, and that's typically how the kids handle money. Not always, but typically that's the way that goes. But getting involved, you're the only other person I think I know that has gotten this detailed with it. I know one other individual has taken the time to, like, the kids buy rental houses. Same idea. They buy the rental houses. They're like 14 years old. They're like, "Crud, the water heater went out." Like, yeah, you need $1,500, bud. Write it out of your checkbook. And you're like, "Oh,
Right.
this sucks. Like, I don't want to do this anymore." So, but that's that's such a great learning experience there for the kids. When I say generational wealth, I know you mentioned that there in your bio. That's one of the things that you guys are really working on. What does that mean to you?
Yeah, so generational wealth means two things to me. It means education as well as money, but probably more heavy on the education part. So, one of the things that I'm passionate about, of course, is financial education, and I teach that on my podcast, Quiet Wealth. But I want to make sure that my children are set up for success financially. And that doesn't mean that I'm giving them tons of money, right? I'm trying to give them more the skills and the knowledge that they need to be successful when when they exit.
Yep.
And and even one of those things is like we talk about debt, right? So we're trying really hard to um help our kids not go into debt for college if they choose to go to college, right? And so far, my oldest daughter is doing that. She's getting her degree in computer science. She's going to do it debt free, and she's going to graduate and not have that crippling student loan debt that a lot of millennials had to have. But my twin daughters right now, one wants to be a doctor, and the other wants to go into real estate. So one's going the college route, and one's not. And the doctor route, of course, that's going to be tricky, right, to do it without student loans. But real estate is such a great vehicle to do that, and so if she can really apply herself, and I mean, you flip a house and make $50,000, that pays for your tuition for the year, right? So there's absolutely ways to do it. I think people always just think in their minds that, oh, you just can't do it, but no, you can. And so that's what I'm trying to do with our generational wealth. And we'll see in the future what that means as well, in the like when we die, and like what we're going to do with that money, but for right now, I want to make sure the kids can handle it before we would even ever give it to them.
Right. What are some resources maybe that you would recommend to our listeners that want to kind of explore this topic further with their kids?
Yeah. So a great resource is I've read a couple of books, and there's a new one I'm reading right now that's called Launching Financial Grownups. It's pretty cool. So it's a book that's about basically how to help your uh older teen, early adult, early 20s kids be set up for success financially, and help them. So that's a really good resource. And then I'm working on um, creating a like a community of to be able to teach families how to do this, how to like follow what we've been doing and add in. It's not that what we're doing is the best, right? But we're doing something, and so we can like collectively do that. And so that, that's happening over at the Quiet Wealth community.
That's awesome. Tell me about building businesses. I know it's one of the other things that you stressed there. I know so you've mentioned that you guys have short-term rentals. You have some flips you guys are working on as a family. Is that what you are investing in as well as with Steady Stream Investments? And I know we probably talked about this in the last podcast episode, but it's been a year and a half and I don't remember, to be honest with you.
You're good. So Steady Stream Investments is all about investing passively into large multifamily and big commercial projects. So Steady Stream is all about educating people how to get involved with those, and then I go out and I vet different teams and different markets and different deals, and then offer them as investment opportunities. So that's one of the businesses. But when I'm teaching about, when you want to build wealth, of course you need to invest, right? And you can invest in these big projects passively. You don't have to do all the active stuff like that we've been doing, or you can do the active stuff. Is like kind of up to you, right? Whatever you want to do, go for it. But then building a business is a key point to building wealth, because businesses are where you're going to have a lot of your tax shelters. Of course, real estate will have tax shelters, but businesses as well. And so, just like I said, one of the income shifting technique, if I didn't have an LLC, I wouldn't be able to use that technique to save that. So it's you've got to have the right structure, and you set up your business, and now, you know when you go out to dinner with your spouse, you can write it off as a business meeting, because if you talk about business. And I mean, there's all sorts of things that you can do to write off, and there's some really great resources out there too for figuring out what can you write off and what can you not write off as well. But just figuring all of that out, so having an actual business so that you can start writing off a lot of your expenses. Like, for example, I work out of my home. I'm here in my home office, so my internet could be written off. Part of my utility bills, because I need to heat my office. It's not the whole house. It's like a portion, right? Wherever your office is. All of your equipment can be written off, and that can save you a lot of money come tax time.
Yeah. And that's anytime you can spend money pre-tax, I think that's the sum of it. It's like, okay, well, I can spend this, and then the person next to you has to go out, earn that income, get taxed on it, and then they can spend it. It's a very different scenario. And that's something I've told a lot of my friends, like I bet on paper you make a lot more money than me, and that's great. Good for you. And that's on purpose every year. And again, I want to do it honestly. I want to do it as the, is as the book, as much as we understand the book, 'cause it's 80,000 pages long, but do it by the book as much as we know how. I'm not looking to, cheat on the taxes, but I'm certainly willing to play by the rules the way they're written.
Yeah.
So,
I think about it as in terms of, you go to a class, like you go to math class, right? And if you are in math class and you use the formulas that are given, you're going to get the right answer, right? So that's basically what we're doing in
right.
terms of taxes, right? Strategies, right? We are looking up, we're figuring out the formulas, and then we're using the formulas to benefit our lives.
That's awesome. Last follow-up question for you. Let's talk multifamily just for 1 second. I'm really curious. What are you guys doing right now? There's a little left turn in our conversation. I've really enjoyed hearing what you've built with your kids, how you're educating them, how you guys are building businesses, the way you guys are shifting income or income shifting strategy. I think that's brilliant. I have not heard that before. That's awesome. What's your take on the multifamily market today? What is today? November 18th, 2022. What opportunities and what risks lie out there for us right now?
Yeah. So today, of course, the risk right now is interest rates, right? And so the amount of leverage you can get is you're struggling with the yield. So in between whatever the interest rate is versus what you can make on the property. So one of the challenges that we're facing is that sellers still want the super high prices, and they're not as willing to come down yet, right? And I think they will, but it's going to be a minute before they decide that they are willing to take less than what they feel like they should be able to get because of what has happened over the past 2 years. So it's been really easy the past 2 years to make a lot of money, especially in multifamily real estate. I think it's going to get harder to make money, but that doesn't mean we're not going to make money. We're not going to do well on the projects that we're doing. We just have to be a lot more strategic. And then also the other thing to keep in mind is that you want to partner with the really experienced people. So again, the people who just easily made money the last couple of years, they didn't really have to try that hard. But now we're heading into a market where you're going to need very experienced people in order and latch on to them, and they're the ones that are going to be able to still continue to make good money and get you a good return on your investment. You just have to be conscious of what's happening, right? And so ask deeper questions. I would ask, as a passive investor, I would ask deeper questions about their experience. Like, did you go through the 08-09 crash, and how did you fare there? Like, what challenges did you experience there? And just kind of understand where they've been. I don't think it's going to crash, right? That, like, multifamily is not going to crash. There are so many indicators saying that we're still behind. We just don't have enough housing for people. And that the supply and demand is what really drives pricing. And so that's an important thing to keep in mind, is that if you're investing in the right markets, right, the markets that are still growing, then you're gonna be okay. And multifamily is much more recession resistant than single family. So we already seen, like in Arizona, for example, that's where I invest heavily in the single family market. It came to a screeching halt. And so now there's like not hardly any activity going on. There's, I was talking to some realtors when I was there the other day, and there's just, a lot of stuff that is happening that has just kind of halted. And then, but in the large multifamily industry, there's still, and the other issue that's happening too with single family is because the homes appreciated so fast and interest rates went up. Now the affordability is it's too much for most new home buyers. So they still need somewhere nice to live. They still want to live somewhere nice. And so now where are they going? Well, they have to go into apartments, which is keeping all of our apartments full. Like, all our apartments are like, 90% plus occupied. And I just don't foresee that like dipping anytime soon, unless we make a big mistake in our renovations or, things like that.
Got it. Absolutely love it. Thank you for giving some color on that. Camilla, thank you again for coming on the show today. I've certainly appreciated it, enjoyed our conversation. If our listeners want to get in touch with you or learn more about you, what is the best way to do that?
Yeah, best way is to follow me on the Quiet Wealth podcast. But you can also find me connect with me on LinkedIn, or you can go to my website, steadystreaminvestments.com.
Perfect. Thank you again, Camilla. Certainly appreciate it.
Thanks, Sam.
All right, that's a wrap.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.